Welcome to another interesting session on the introductory aspect of the public sector accounting and finance. So today we want to look into the regulatory framework of public sector accounting. What do we mean by regulatory framework? Every discipline and profession has its own regulatory framework. So public sector accounting is not an exemption as a profession of its own or a discipline on its own. It has its own regulatory framework. Regulatory framework are those laws, regulations, guidance or guidelines, norms, conventions, concepts, and so on and so forth that regulate the practice and the operations of public sector accounting. The operation and practice of public sector accounting is being guided by some laws, some standards, some concepts, some regulations. All these things put together are what we refer to as regulatory framework of public sector accounting. We are going to pick these regulatory frameworks one by one and explain them. We will not pick all, we just pick some because they are inexhaustive. We have so many of them. So the first regulatory framework we are going to look into is the main law of the land, the number one law of the country. This law supersedes every other law that has been enacted or may be enacted by the National Assembly. If any other law made by the National Assembly, if any of its provision runs in contravention with the provision of this law, that other law remains null and void, ultra vires, and of no legal effect to its level of inconsistency with the provision of this law I'm talking about. So which law is that I'm talking about? I'm talking about the Constitution of the Federal Republic of Nigeria, 1999, as amended. That is number one law of the land. And that law has made a lot of provisions that have some bearings on public sector accounting. So that is the first law that regulates the operation and practice of public sector accounting in Nigeria. So here we highlighted some provisions of the Nigerian Constitution that have some bearings on the public sector accounting. One of them is on Section 80, subsection 120, Section 80 and Section 120 made provision for the establishment of Consolidated Revenue Fund. Consolidated Revenue Fund is the fund of federal government through which we finance recurrent expenditure. We are going to treat it as a topic on its own. So when we get there, we'll treat it in details. But at this level, just be contented with knowing that CRF, which is called Consolidated Revenue Fund, is the fund we use in financing recurrent expenditure. So Constitution Section 81, subsection 120, Section 81 and Section 121 made a provision for authorization of expenditure from the CRF. The Constitution established the CRF. Constitution also made some provisions on how money is going to be spent or how money is going to be authorized from the Consolidated Revenue Fund. Sections 83 and Section 123 of the Constitution of the Federal Republic of Nigeria made provision for establishment of contingency fund. Contingency fund is the fund we use to take care of emergencies. Whenever we have national emergency, it is through contingency fund that the expenditure is taken care of. We are going to treat contingency fund as a topic on its own later on in the course of the course. So Section 83 and Section 123 of the Constitution established the contingency fund. Section 84 and Section 124 made provision for remuneration of statutory officers. The payments that are made to statutory officers of the government are all enshrined in the Constitution. And all these are what are being discussed and operated on in public sector accounting and finance. Section 84 subsection 4 and section 124 subsection 4 made provision for the comprehensive list of the statutory officers. All the statutory officers of the government, if you go to section 84 and section 124 of the Constitution of the Federal Republic of Nigeria, you see where they are listed. And all of them are what we study under public sector accounting. Then section 85 and section 125 made provision for audit of public accounts. The financial report of the federal government of Nigeria is being audited at the end of every fiscal year by the Auditor General of the Federation. And the process of that audit and everything relating to it are all enshrined in the Constitution of the Federal Republic of Nigeria, section 85 and section 125. Section 86 and section 126 made provision for appointment of Auditor General. Like I've said earlier, the process of audit of the financial statement of the Federal Republic of Nigeria, we call it statutory financial statement of the Federal Republic of Nigeria, are all provided for in the Constitution. Then the appointment of Auditor General that will even do audit, that will audit these reports or these records, is also enshrined in the Constitution, section 86, subsection 126. Then section 87 and section 127 also made provision for the tenure of the Auditor General. Auditor General, the office of Auditor General, being a political appointment, also has its own tenure of office, and all these things are contained in the Constitution of the Federal Republic of Nigeria. And because they have some bearings on the public sector accounting and finance, that's why we included them under the regulatory framework of public sector accounting, because they regulate the operations and practice of public sector accounting and finance in Nigeria. So after the Constitution, we also have other regulatory frameworks which we are going to look into. This next one is also a law. It's called Finance Control and Management Act of 1958. Finance Control and Management Act of 1958 is a law enacted by the National Assembly. Acts are laws that are made by the National Assembly, that's the legislative arm of the government at the federal level. Finance Control and Management Act of 1958 made a provision on how accounting system is being regulated in Nigeria. It also provided for the processes and the procedures that are going to be followed in preparation and maintaining of accounting records. It also provided for the types of the accounting records that are going to be kept by the federal government. So the type of books that are going to be kept, the processes and the procedures that are going to be followed in preparation of these financial records are provided for by the Finance Control and Management Act of 1958. Then another regulatory framework is also a law, is Allocation of Revenue Federation Account Act of 1982. Allocation of Revenue Federation Account of 1982. Federation account is a distributable pool account where the money in that account is being distributed to the three tiers of government at the end of every month: the federal government, the state government, and the local government. The money accrued to that account is being distributed at the end of every month. We are going to also study federation account as a topic on its own in the course of this course. So, but now at this level, just be contented with knowing that federation account is a distributable pool account from which money is being shared to the federal, states, and local governments in the country at the end of every month. So Allocation of Revenue Federation Account Act of 1982 made a provision for how the money in the federation account is going to be distributed. All the revenues that are contributed into the federation account, how are they going to be distributed at the end of every month, and what is the criteria with which this money is going to be distributed, and what is also the formula for which the money is going to be shared. We have what we call allocation formula, and we have what we call allocation criteria. All these we are going to study in details in the course of this course. But all this allocation formula and all these allocation criteria for sharing of the revenue that are accrued to the federation account is being prescribed by the Allocation of Revenue Federation Account Act of 1982. Then another regulatory framework after this one is not law now, it's a regulation. We call it the financial regulation. So financial regulation, what do we use it for in public sector accounting? These are like manuals. They are manuals we use in setting up the procedures and steps to be followed in preparation of financial records in the public sector. It's like the SOP. If you're working in private sector, you know what SOP is. Standard Operating Procedures. It's a manual, just like a booklet. Inside this booklet now, it states the processes and procedures that are going to be taken in preparation of financial records or financial reports. If you assume office, you are handed over with an SOP. When you go through the SOP, you now see the processes, how things are done in that department or in that place of work. The same thing in public sector, we have what we call financial regulations. We use it, is a manual that sets out the processes and the steps to be followed in preparation of financial records or government transactions. So after financial regulations, we have another regulatory framework. This is called finance or treasury circulars. Finance or treasury circulars. What do we use them for? Circulars, most of us know what circulars is. They are like memos you pass in offices. We use it for communication. We use them to pass information. We use them to give instructions. So there are administrative tools. In public sector, we use finance or treasury circulars to amend existing provision of financial regulations, or we also use them to introduce new policy guidelines. We all know that financial regulation is a manual that sets the processes and procedures to be followed. Now, if there is any need to amend any of those processes, or if any of those processes is amended, we need to communicate for those who are going to implement the amendment. So it's treasury circulars that is going to be circulated, that is going to be sent across all the relevant stakeholders. That these things, although we were doing it this way before, but now this is the way we are going to be doing it now. So that circular is what we call treasury circular. We use it to amend the provisions of the financial regulation. Or whenever a new policy guideline is introduced, this thing we have not even been doing it before, is not an amendment, it's a new introduction. New process is going to be introduced into the system. We need to pass finance circulars. So circular is going to be distributed or circulated. When people now get it, they say, we have introduced this, and then every other person should key in. That is regarded as finance circulars, and is also part of the regulatory framework of public sector accounting. So another regulatory framework, this one is a law as well, Public Procurement Act of 2007. Like I said earlier, whenever you hear act, know there is a law made by the National Assembly. The year attached to it is the year the law was signed into, the law was enacted. That is the year the law was made. So, Public Procurement Act of 2007, what does that law provide for? Once we hear procurement, we are talking about government award of contracts and also acquisition of goods and services. Procurement. So we know that procurement is what the government does often, and it's through procurement that much corruption is being perpetrated. Therefore, there is need for a law to be made to guide processes of procurement in government. That was what that law, Public Procurement Act, was made in 2007 to make provisions for the methods of procurement and award of contracts, as well as the approval thresholds and the processes, other processes that are involved in procurement in public sector. Things that are involved there like award of construction contracts, approval thresholds. This approval threshold is being set by the Bureau of Procurement, by the Bureau of Public Procurement. We are going to meet that. So, for effective implementation of the provisions of this Act, the Act provided for establishment of two agencies. These agencies are National Council on Public Procurement, NCPP, and the Bureau for Public Procurement, BPP. For effective implementation, these two agencies were established. So these two agencies are charged with the responsibility of implementing the provisions of this Act. We are going to also study these two agencies in details. Their compositions, what are their powers, what are their responsibilities, their functions, and all that by the time we enter into the course in details. We are still at the introductory level for now. So just be contented with knowing that National Council on Public Procurement, NCPP, and Bureau for Public Procurement are charged with the full responsibility of the implementation of the provisions of the Public Procurement Act of 2007. So the last act we want to look into as part of the regulatory framework of public sector accounting is the Fiscal Responsibility Act of 2007. Fiscal Responsibility Act of 2007 made provision for the prudent management of the country's resources. Those who handle the machinery of the government, those who manage the country's resources. This law is made to make sure that they manage the resources prudently. There is no extravagance. There is no waste of the country's resources. They cannot use the country's resources anyhow they like. That is what this law provided for, to make sure that the country's resources are managed prudently and also to ensure long-term macroeconomic stability of the national economy. That the economy, the macro, in the economy we have microeconomy and we have macroeconomy. By macro, we are talking about the broad level. Micro is the smaller, that is the household, the corporate, the organizations and individuals on separate basis. But macro, we are talking about the general economy. The long-term macroeconomic stability of the national economy, so that the economy will be managed well. That's the major provision of this Act, Fiscal Responsibility Act of 2007. And in order to achieve this prudent management and at the same time national stability of the macroeconomy, the law emphasized on the preparation of two major things, which are medium-term expenditure framework, which is MTEF, and the national budget. Because for you to manage the resources well, you should have what? You should have a plan. Those plans are in form of the national budget and the medium-term expenditure framework. What is MTEF, National Medium-Term Expenditure Framework? This is a 3-year plan made by the government through which the budget is drawn. Before the budget is done, we do annual budget every year. Before the budget is made, there is already a medium-term expenditure framework in form of a 3-year plan. It is from this 3-year plan that the 1-year budget is cut out from, is made or is drawn. As we are this year now, for instance, if this year is 2025, we already have MTEF for 2026, 2027, 2028. By next year, that will be 2026. From that medium-term expenditure framework, we draw the budget of 2026. So it is this Fiscal Responsibility Act of 2007 emphasized much on the preparation of these two documents, because it will enable the government to do what? It will enable the government to manage the resources effectively and prudently, and at the same time ensures the macroeconomic objective of the government. There are still other regulatory frameworks like the standards. In public sector accounting, we use what is called IPSAS, International Public Sector Accounting Standard. It's also a regulatory framework. That is the standard that operates the preparation of financial statements under public sector. Just like we have IFRS, International Financial Reporting Standard, on the private sector. So in public sector is IPSAS. It's also a regulatory framework. There are still so many other laws like EFCC Act of 2002, ICPC Act of year 2000. All of them are regulatory framework. We have other Miscellaneous Offences Act, BOFIA Act, that is Banks and Other Financial Institutions Act. All of them are still under regulatory framework of public sector accounting. So we are drawing the curtain on regulatory framework of public sector accounting here. If you are watching this on YouTube and you've not subscribed yet, you can do us well to subscribe, so that subsequent publications you will be able, so in our subsequent videos, you will be able to be notified. Thank you and God bless.